When someone you love passes away, the pain is immense. You're trying to cope with an unimaginable loss, but then the bills start coming. It's a common misconception, a widespread fear that you might suddenly inherit a mountain of debt. Many families believe they're personally on the hook for every single outstanding payment. But what if I told you that in many cases, certain bills become essentially unpayable the moment someone takes their last breath? That's right. Creditors often cannot pursue family members for these specific types of debt. This isn't just about saving you money. It's about lifting an enormous weight off grieving shoulders. Get ready, because we're about to uncover the 9 surprising bills that often vanish with the deceased, and how this hidden truth could be your family's financial lifeline. Credit card debt, the disappearing balances. Let's start with one of the most common anxieties, credit card debt. Here's the crucial distinction. If the credit card account was solely in the deceased person's name, that debt typically belongs only to them. The credit card company can file a claim against the deceased's estate for the outstanding balance. But here's the kicker. If the estate has no money or insufficient funds, the debt is often simply written off by the lender. Family members, even spouses, are generally not personally liable unless they were a joint account holder. This makes individual credit card balances a frequent contender for bills that magically become unpayable after death, freeing families from a significant financial burden. But that's just the beginning of what doesn't transfer. Federal student loans, a compassionate policy revealed for many, student loan debt is a lifelong burden. But the federal government offers a surprisingly compassionate protection that most people don't even know about. If a borrower with federal student loans dies, the government will discharge the remaining debt entirely. All a family member or representative needs to do is provide a certified copy of the death certificate to the loan servicer. This incredible policy ensures that the financial weight of education isn't tragically passed down to the family, offering immense relief to countless American households. It's a crucial safeguard that often catches people off guard. Personal loans. When collateral doesn't exist, next up are personal loans, also known as unsecured loans. These are granted based purely on the borrower's creditworthiness, without any collateral tied to them. Just like individual credit card debt, if the person who took out the loan passes away, the lender can make a claim against their estate. However, if the estate is insolvent or simply lacks the funds to cover the balance, the debt generally dies with the person. Relatives are usually not required to pay off the loan from their own pockets. These loans frequently become unpayable bills that lenders must absorb as a loss, leaving families free from the obligation. Medical bills, the weight of end-of-life care. Medical debt can be astronomical, especially for end-of-life care. This debt is the primary responsibility of the deceased person's estate. Hospitals and healthcare providers will seek payment from the estate. But, and this is a vital point, they cannot pursue family members personally for these bills. Given the staggering cost of serious illnesses and extensive care, it's incredibly common for medical bills to far exceed the value of an estate. In these heartbreaking situations, any remaining debt is legally discharged. This protection is absolutely crucial, ensuring that the financial catastrophe of a serious illness isn't compounded by an overwhelming, inherited debt for the grieving family. Payday loans, the short-term trap, swift end payday. Loans are notorious for their high interest rates and short repayment terms. These too are unsecured loans. When the borrower dies, the obligation to repay falls to their estate. However, due to the very nature of these loans, many borrowers have limited assets to begin with. If the estate cannot cover the amount, the payday lender cannot legally pursue family members for the money. These predatory loans are yet another example of debt that frequently becomes unpayable upon the borrower's death, offering an unexpected form of relief from what could otherwise be a continuous financial nightmare. Certain business debts, corporate shields, and sole proprietor woes. The fate of business debts after death depends heavily on how the business was structured. If the deceased was a sole proprietor, their business debts and personal debts are typically treated as one and the same. This means creditors can indeed make a claim against the estate to settle any outstanding business loans or bills. However, if the business was set up as a limited liability company or a corporation, the owner's personal assets are generally protected. In such cases, the business's debts would be paid from the business's assets, and if those are insufficient, the debt may simply go unpaid, shielding the family's personal finances. Utility bills in the deceased's name, services cut, debts gone. Even something as seemingly simple as utility bills can become a point of confusion. Bills for electricity, water, or cable that are solely in the deceased's name are the responsibility of the estate. The estate should pay the final bills from its funds. But here's where the relief comes in. If there is no money in the estate, the utility company cannot force the family to pay for services used by the deceased. The family would only be responsible for charges incurred after the date of death if they continue to live in the residence. This means those lingering bills for past services often become uncollectible debts if the estate is empty. Social Security overpayments, the surprising clawback. This one often catches people by surprise, and it's a common source of frustration for grieving families. It sometimes happens that a Social Security check is issued for the month a person dies. Since eligibility for Social Security benefits ends upon death, that payment is technically considered an overpayment. The Social Security Administration will seek to have the funds returned from the estate. However, if the estate is empty or the funds have already been spent in good faith, the family is generally not liable for repaying it. This makes it one of the more surprising and often contested unpayable bills, with many families reporting aggressive clawbacks that feel incredibly unjust, especially when the payment was for the previous month's benefits. Certain tax debts, the IRS's limits, even the mighty IRS has limits when it comes to collecting debts from the deceased. While the estate is responsible for filing a final tax return and paying any taxes owed, there are situations where the estate's assets are simply insufficient to cover the entire tax liability. In these cases, the IRS cannot always collect the remainder from the family. There are exceptions, of course, such as if a family member was a joint filer on the tax return or is a transferee of assets. But otherwise, the remaining tax liability can become an uncollectible, and therefore unpayable, debt, offering a sliver of relief even from Uncle Sam, understanding financial finality, a shield against burden. Navigating the financial aftermath of a loved one's death is an emotionally and mentally draining task. But knowing that not all debts automatically transfer to the family can provide significant relief during an already difficult time. While creditors certainly have the right to seek payment from the deceased's estate, they cannot, in most cases, pursue relatives for these specific unpayable bills. This crucial distinction is a cornerstone of consumer protection law, designed to ensure that the profound grief of losing someone isn't cruelly compounded by an inherited financial crisis. Being armed with this knowledge is not just empowering. It's a vital shield, protecting your family from unnecessary stress and financial burden when you need it most. Were you surprised by any of the bills on this list? Have you had a personal experience with any of these debts after a loved one passed? Share your thoughts and stories in the comments below.